3, 2, 1. Live. Hey friends, Ernie with the Trader of Futures here at your service. The trade setup service, that is. So I'm going to do a new thing for the next, I don't know, we're going to try it all this week, and if that goes well, I'll do it next week and the week after and the week after. And, 2, 1, live. Of course. Hey friends, Ernie. We need to turn that off. Trader of Futures. I always forget about that that monitor station, that monitor window that I open up, and they see the thing is, YouTube did a different thing. Now you can't mute that video prior to you going live. So while you're sitting there waiting for it to go live, you have to wait for it to actually appear, and then you can mute it. Before, you used to be able to mute it in advance. So just another way that YouTube service, I don't know, maybe the people that are doing it aren't thinking, or maybe I'm just out of the loop. Maybe that's what it is. But in any event, what I'm going to do for the coming week with regards to the artificial intelligence setups, and for those of you who don't know what those are, this is a service that I run with my partner. And we've been doing this now since the beginning of October of last year. We have about 80 or so subscribers to the service. We haven't done any real marketing yet, just kind of word of mouth and me putting out a shout out every once in a while on a YouTube video, and that's it. And the service is it's not like your regular signal service or alert service or anything like that. It's very, very different. It's unique. I've never seen anything quite like this. Now, they are alerts that go out. They go out at night, and they're good for the next session. But what they are is they're scenarios. They are scenarios on if the market, it's kind of like an if-then thing. If the market does this, then this scenario will trigger, and there's a high probability that it will move to here. Those are the scenarios, and we find out these scenarios through an AI pattern matching machine, kind of a machine learning type of thing that can scan virtually all the Forex major pairs, all the futures, and very soon all of the equities. And if you've been watching for a while, or if you were a subscriber, you would see that our list every night is getting bigger and bigger and bigger. And that's because we are becoming more proficient at finding these setups across a wide range of asset types that include stocks, Forex, and futures. So what this means is for the average person that is trading and they want to take advantage of a service like this, is that regardless of your account size or what you trade, this service will have something for you. So for instance, let's say that you have a very small account, but you can't afford futures, and even equities might be outside of your realm. Well, you can do Forex, and you can trade micro or mini contracts in Forex, because there will be enough of these alerts happening every day to make sense. Like, so for instance, you can see last night we had 1, 2, 3, 4. They're in the green right here. So what you're seeing here are all the alerts or setups, I should say, that came out last night. And what they're saying is that if the asset reaches this entry price right there, if the asset reaches this entry price, then the setup is what we call triggered. And then it's up to you on whether or not you want to take that trade or not. And it's going to be either a buy, sell, or breakout. And the exit isn't really an exit per se. We're not saying that this is where it's going to reach. That is the expected move. What some people might say is the mean average move. The the one standard deviation move that's expected should price reach that entry. Now, even the entry isn't like perfectly, on that exact level. Even that is taken with, that is the mean entry as well. So we find that mean entry and then the mean exit. Now the exit is figured on an average of anywhere from 0 to 4 days. So that's the way it works. And so what I'm going to be doing is, now these alerts, by the way, and the reason why I'm going to be putting them out there, you might be saying, well, why are you putting them out there if this is your service? Aren't you giving away something, Ernie? And the answer is no, because I'm putting them out at the end of the day or near the end of the day. So there's a possibility that even some of these are still valid, but close enough to the end of the day so that, the majority of them probably won't be valid, and I'm not giving up anything, and I'm not cheating our subscribers, because they get these when the futures session and the Forex session and equity sessions close the previous day. We put them out then. And so then they have from then all the way through the night and then all the way today until the session closes to see whether or not one of these things actually reaches that entry. And then they can decide what they want to do. So what I'm doing is I'm taking away all of that and just saying, okay, I'm going to wait near the end of the session, start talking about it. And what we're listing here, just so you see here, you'll see over here, the status, new, and then prior. So prior means that we're either in the trade or it has already hit its target. All right, and you can see here are 3 that were put out. It looks like they were put out on Friday. And they all hit their target. All right. And then so tomorrow what you'll see is those will probably come off, and then there will probably be a few of these up here that will be in this gray area. And they'll either be in play or they've hit a certain percentage of their target or they hit their target. So I've talked a little bit about, exactly what how we get these setups. And here's the really, really cool part. There's no technical analysis going on here. There's no volume profile analysis. There's nothing like that. There are no trend lines or patterns or anything like that that you would be using in a normal course of action. Virtually every single one of these trades is unique. Once in a while, you'll see the actual pattern that triggered this trade repeat itself every once in a while. Maybe one in every, 30 or 50 signals, you might get one that repeats. So these aren't like we have this strategy and then we just run it and see what pops out. No. These are actual patterns that the machine has found that have repeated themselves at least a significant number of times, a statistically significant number of times over the past 20 years. That's another important thing, is that in order to have an asset on this list, we have to have at least 20 years of data. So our machine goes back and looks at 20 years of data and then applies, and the way I've described this in the past is, but I'll just say in the big picture, it applies patterns and looks for a pattern to repeat itself. Now, the thing is, it's not going out there and saying, oh, we got these 5 patterns and we go and we look for them. No. It actually constructs the patterns on the fly. The machine constructs the patterns on the fly using what I call like an alphabet or phraseology or pattern phrases or a pattern lexicon, which consists of fragments of patterns. Anywhere from, last count is something like 450, plus the machine has created some of its own. and then looks at these in all different combinations. Imagine 500 different things, and then not only doing them, say, 2 at a time, all different combinations, but maybe 3, 4, 5 stacked on top of one another. That's what this machine does. It finds like this combination of patterns, and then it recognizes that pattern as something that has repeated itself under certain conditions over and over and over again, and then it will look at it and say, well, okay, this one's repeated itself. Is it worth looking at? And the criteria that we give it to determine whether or not it's worth bubbling up to the top and something that we might be interested in is whether or not it, first of all, has a positive equity curve. So in other words, given that this scenario happens and it triggers, and over the next 4 days, it's either going to be in profit or not. What kind of equity curve does that show? And has it happened a significant number of times? And the amount of profit that it has, or the amount of movement that it's had in that 4-day period. And so all of that is kind of proprietary, but those are just the basic criteria that the system uses. Everything else it figures out on its own. And every night, it's literally looking at tens of millions of patterns across this whole spectrum of assets. And what's taken us this long to get out this many trades, this many setups, is the sheer magnitude of things that come out, and trying to figure out how we're going to programmatically or automate some of this selection process that bubbles up the ones that are the best candidates. Because we do more than just, that criteria. There's other criteria that ensures robustness across them, so that each one of these trades, these patterns that it finds, have a level of robustness to them too, where it's looking at depth of the strategy itself. And so that's essentially what this AI does. It's a pattern matching machine. It's a supreme pattern matching machine. Making tens of millions of matches every night. And they bubble up to the top. We look at them. We, through our own discretion, but through our process, our own set of filters, a secondary set of filters, we decide which ones we want to put up there. Because we can't put all of them up there. If we put all of them up there, it'd be crazy. Although we're putting more and more and more up there because we're able to do more and more of these scans. So that is what's happening here with these guys. And so what results in this is that you have a bunch of setups that are essentially derived from completely non-correlated strategies. So think about that. You have all of these setups, and they're uncorrelated with each other. The returns are uncorrelated because they are derived from a completely unique set of criteria. It's not the same strategy, and then comparing it across a bunch of assets, or even just a few strategies. It's literally tens of millions of strategies. And like I said, there is a chance that, a strategy might repeat itself. There might be some strategies in there that are better than others for whatever reason. And so they might, pop up every once in a while. And so, like, out of, say, 10,000 setups that we report, we might have, a handful of them that have repeated themselves a few times. But by and large, what you're seeing here, right here, what you see here, these, doing this is, I'm trying to be a weatherman here and do this in a way that it's not easy. So props to weathermen and weatherwomen. What you're seeing here are a vast array of uncorrelated strategies that now, why is that important? Why is that so friggin' important to a trader? The reason why that's important to a trader is that when you have a number of uncorrelated strategies with one another, The odds are you're going to be long and short on different ones at the same time, and the odds are that they are not all going to move with the market at the same time. Some might move up, some might move down. But if all of them, over time, if all of them are show good characteristics over a long period of time, say 20 years, more often than not, they're going to move up. So let's say that they move up, and we have criteria around that. We only choose the ones that have, say, a 70% to 80% win rate or higher. Actually, we've chosen 80%, and we found that since doing this, on average, our win rates, when we say win rate, that means something that has made, not something that's reached the target, but something that has made profit, any amount of profit in that 4 days, has been closer to 90%. So that means it could make $1, or it could have reached the target, or it could have gone 200, 300% beyond the target. So all those cases, you have your outlier cases, you have your mean. The vast majority of them hit about 50 to 60% of their target. And you can look at that, even that, as sort of a one standard deviation. Our system also adjusts for different factors, market factors, particularly the volatility in the market, liquidity, that sort of thing. And so that has a significant impact on things as well. I'm not at liberty to discuss how that happens. So that's what we have here. And this service is uncannily accurate and good. Now, not all of these setups trigger. As a matter of fact, in markets that have a much greater degree of volatility, about 1/3 or so, say 30 to 35% of them trigger. In lower volatility markets, that goes down a little bit, maybe to 25%, maybe 20%, 25%. But it doesn't matter. We get so many of them that there's always enough things to trade. So that's what we got. Now, a system like that, where you have the flexibility to trade what you want, that has a very, very high winning percentage, you understand the odds and how things work, you're encouraged to trade more than one thing at a time because that will be to your benefit, as it will, because they are uncorrelated with each other, they will have a tendency to kind of hedge one another. When you have uncorrelated strategies, that means that when one is going down, one is likely to be going up in terms of its return, or and so any kind of dip or drawdown on one thing tends to get minimized by the others that you might be holding at the same time. And if they all have generally a good winning percentage, then their profits are going to be additive. And so what this ends up looking like is that you might have some with wavy up equity curve, and then this one goes like this, and then this one goes like this, and this one goes like this. When you add them all together, they start smoothing out and giving you one nice smooth equity curve. I guess that's the best way to describe that. So that's what we're going to do. We're going to be looking at these. Oil was a big win. We can see here that we got 1.5 points in oil on this last one. Now, what does that mean? What does it mean to get 1.5 points in oil? It means that if you had bought when it triggered and then exited when it hit its target, off of that one contract, just putting one contract in there, you would have made, hold on, let's see, where is it, 56.292. It's 54.823. You would have made a little over $1,400. One contract, one trade. Now, these are all that hit and closed out. Actually, I believe they closed out today. All right, so there's one, $1,400. Natural gas, that's 43 pips. It would have made 430, a little over 400. All right, so now we're up around 1,800. On NASDAQ futures, these are $5 a point, right? Is that right? No, it's $20 for every $1, right? So we have 7034 minus 6990 equals times 20. You would have $880 plus 1,400 plus 400. So just on those three trades alone that closed today, you would have made over $2,600. All right? And, you know, you don't have to believe me on this, because what I'm going to do is I'm going to show these. I'm going to keep these up here just the way they are, right? And I'm going to show these every day. You'll be able to follow them. You'll be able to see for yourself what kind of return we're getting. Now, the other part of this, and you know, I can do this all day long. I did this in the beginning when we first started to demonstrate this to people back early last year. And people that came into our Discord group, and by the way, there is a invite to our Discord group down below. Not the private group, but the main Discord, where people talk about trading all day. People that were in our Discord group got these calls, and I put them out there, and they were fantastic. We had a great winning streak for about 4 months. I think there were, I don't know, something like 40 trades and 38 winners or something like that. And so from that attracted most of the people that we have actually with us today. And so then we've been slowly growing it since then. Actually, we didn't even open up. This was back in early part of last year, and we didn't even open up until after the summer was over, until October. So we opened up, those people wanted in, they got in, and then we started this service, and then we've been slowly building up that service. We wanted to make sure that the support was good. We have a private channel in the Discord where we provide our support. We're looking at perhaps moving that to a different platform, but right now that's where we do it. I can show you this right now. So this is our Discord. The app is called Discord. So here it is right here. And this is the public room, or one of the public channels. This one right here, AI Setups, is the private channel. We have the AI Mentor, and he's my partner, and he provides support in there as well as I do. All right. So we provide a very high degree of support. We also provide one-on-one counseling or support that is free of charge. If it's something that requires something extensive, then we can work out, you know, we have like a coaching or a mentoring program as well. But people can call us up, email us, whatever, talk to us all day long on this support channel. And so the degree of and level of support is very high. Now, one thing that we put out yesterday, actually over the weekend, put it out over the week. Put it out last weekend, actually. Is a video. Just recently, we did a member survey, a subscriber survey. So here's my YouTube channel, Trader of Futures. We did this AI Setups Trader Signal Service survey right here. You can see, man, it's already got 900 views since Friday. So the reason why this is significant is that we did a survey. It was an anonymous survey because we wanted to get results from people and not feel pressured based on what they said. So I encourage you to go take a look at that video. And we did this in an effort to be transparent on how we run this service. And I'm very, very pleased with the results. There are some things in there that we learned from and things that we need to improve, because that's what we asked them. We asked them for the good, the bad, and the ugly, and what can we do to improve. And so they all answered very honestly, basically mostly positive, and that's a good thing. But we didn't hold back on any of the negative comments either. We took everything and we answered everything that was in that survey, and we provided commentary on it. And so you can decide for yourself just by looking at the survey and what current people are doing. I couldn't possibly think of a better way. And we'll do this periodically. We'll probably do this maybe once every, 3 months, maybe once a quarter. And we'll put that out there and get people's opinion, and then publish it to the world so that you can see exactly how people feel about the service. All right, so there's that. Now, a lot of people, one thing that we were surprised about was that about 1/3 of the people are actually paper trading the service. And they've been in it for a month or two or so, and they're paper trading, and they're doing that mostly so that they can get their execution skills down. Other people have they've gone right into it, and they're trading, and they're doing well. And so that's good. So I recommend that to everybody. Now, everybody that buys into the service has to also buy into the training that we provide prior to it. And it's a very modestly priced. The training is really basically the price of 1 month of the service, which is $125. So you take the training, you buy the service, you decide whether or not you want to go right into it, because after you have the training, you should have enough if you're comfortable with your trading platform. You should be able to get right into it, but I recommend that people at least take a week or two to get used to the symbols, and we provide references for all of this information. And before you actually jump into it, just to make sure that it's something that works for you. The price of this service is ridiculously low, and we've already raised the price once, and the way I look at it, I mean, this thing should be a lot higher because, well, heck, on this alone, on just 3 of the trades from last week, from late last week, you would have made enough to pay for 2 years of the service on just 3 of the trades. 2 years of the service on the profits you made from just 3 of the trades. And we have these type of trades all the time. Now, does that mean that you're going to profit on every single trade that's out there? And the answer is no, because that really comes down to the individual and their ability to literally get in and get out. You wouldn't believe it. There's a lot of people that just struggle with that, and that's one of the reasons why a lot of people paper trade. And we've had a few people that have lost money because they not because of the service, but because of their behavior. And so one of the things that we try to do with the support and with the training is to reorientate people to the correct behavior, and then practice that behavior, and then enter with the service. That's the way it works. I think that's the way it works best. Let's see. So I'll answer some questions here. Chris Rock. Hey, Ernie, hit the like already in case I get busy and miss the live stream. Have a great day. Thank you, Chris. Hey, Surfing Goat. Alex, you didn't include Bitcoin in the title. Equals Ghost Town. Exactly. I'll add it later, so then we'll fool other people to get in. We don't do crypto, by the way. And the reason why we don't do crypto is because there's simply not enough historical information. So here are the comments that I'm reading. I get the AI setups, can vouch for the calls. Thanks, Surfin. Good show. Thank you, Liam. Ernie, we want moon Lambos by 5 p.m. All right. Explain how much do you need to have in the bank to start with these 3 trades. With these trades, Surf and Goat, you need probably a substantial amount. You should probably have $20,000 to $25,000 in the bank at least. There are, with those trades though, there are micro versions of each one of those. At least for CL and NG. And for some time in the near future, for NQ, there will be micro versions too, which only require about 1/10 the amount of capital. So when that happens, actually, even if you just wanted to trade 2 of these, you could trade with significantly less, maybe with under 10,000. But as we increase the service and as we add more Forex and other things, you'll be able to make choices. And as more micro contracts come into play. Oh, by the way, I got an email from the CME group today, as a matter of fact. Where is it? I know where it is. You can't really see that, can you? Open the original. So we got this notice today in the from the CME group about the futures. And this is really, really great news for people who don't have big accounts that want to trade these signals and want to trade the... Do we have a problem here? There we go. There's the green screen back there. So it looks like the CME group is going to offer micro E-mini futures for a lot of, I mean, already they're doing it for several of the currencies. They're doing it for gold and for energy, for oil and natural gas, and a couple of others. But apparently they're going to also be adding it to all the indexes. So the E-mini S&P, the Dow, the NASDAQ, you'll be able to get E-mini versions of those. So those are 1/10 size contracts. So that means you'll be able to trade futures with far less money. Instead of having a $25,000 account, you might only need a $5,000 account and trade futures. How's that? And using this service, that's just a fantastic combination. So that I am definitely looking forward to. Maximus, how much money do you have at risk to make the profit you showed on your calculator? Curious about the position management and account size needed to reap that kind of profit. So for oil, I can tell you specifically how much you would need. But I would say that with a $25,000 account, you could take all three of those trades. So hold on, let me want to answer your question, so give me a second. Energy, crude oil, margin. So you need about $3,700 at least to hold one of those contracts in crude oil. What were the other trades? Natural gas and Q. With natural gas, you would need about $1,850. So that's $3,650 plus $1,850 plus, and then the last one was NQ. Yep. That's the NASDAQ. With the NASDAQ, you would, well, it's a lot more with the NASDAQ, plus 7,600. So in total, you would need at least $13,000 in margin. Now, would I do this trade if I only had 13,000 or even 15,000? I wouldn't take all of these trades. I probably wouldn't have taken the NASDAQ because it would have put me over the top. I'd probably want to limit the amount that I put on to about 30% of my total. So to take all of this, say times 3, I would probably need a $40,000 account. Now, if I didn't take the NASDAQ, and so I had $5,500 in total margin for the other two, probably need about a $17,000 account. So it depends on what you're trading. Now, of course, we have Forex trades too that you can trade. Now, also on those three, on at least 2 of those, on natural gas and oil, there are micro contracts that are 1/10 that size. So you would need 1/10 of that. Now, NASDAQ, that's a pretty expensive one, but that falls into the same realm that's going to happen in May, where you're going to be able to get a 1/10 size of that account, where now it's $7,600. You'll only need $760 in order to have a NASDAQ contract to hold. Of course, you know, you make also 1/10 the profit. But that means that you can trade these signals and trade these things. You could trade as many contracts as you want now. Instead of trading one full-size one. You could trade, say, something that fit your size, maybe 3 small micro-size contracts. Chris Curry, what's the capital requirement for trading your AI setups? I think I've been just talking about that. It varies widely depending on what you trade, what version of what you trade, etc. We have people that right now, with the current situation in the world and our current offering, where we wouldn't recommend much less than 10,000. Actually, we'd recommend that you do more. But as we add more Forex trades and other trades and equity trades, you can go actually a little bit lower. And then in May, when the CME comes out with micro futures contracts, I'd say that it's absolutely possible to do this trading with, say, a $4,000 or $5,000 account very easily. That's all right, Chris. William Redfire. By the way, Tom Sosnoff from Tasty Trade is planning to launch a new disruptive exchange enabling scaling future contracts for traders of all sizes. A little late because the CME is going to come out with futures contracts that are 1/10 the size anyways, and there's already a bunch of contracts that are already 1/10 the size, including currencies, metals, and energy. And now they're going to do indexes. But that's really that's a good addition. Knowing that Tom will do that, then we can recommend, maybe we can go to Tom and we can recommend using his service. As a matter of fact, I think I'll call him up, seeing that I have an in with him. All right. Banjara, I hope I pronounced that correctly. If one doesn't have time to place all the AI setup trades, is there a service for managed funds based on the AI setups? No. No, there isn't. Maybe someday in the future we'll do that, but our service is so new that what we're really interested in doing is building up the service and getting people in. So, like I said, right now I've got about 80 people. Maybe when we get to 500 or 800 people, we'll start thinking about something like that. Chris asks, would any of the AI setups have any usefulness in trading small options contracts? Absolutely. It would, but that we don't supply any advice or any setups that are in terms of options. But if you're an experienced options trader, you could use this information definitely to your advantage. Absolutely. All right, so if you're interested in the AI setup service, like I said, what I'm going to do is I'm going to be coming back every day with the current, the most current setups and which ones where the targets have hit. And then you can follow along and see for yourself exactly what's going on. I don't know how you can be much more transparent than that. In the meantime, please go check out our video, our most recent video on the survey we did of people, so you can get people's that have actually taken the service, their opinion, their unbiased, anonymous opinion. We have no idea who actually filled out those survey questions. We did it through SurveyMonkey. And yeah, there you go. And I know that we have some people that are taking the service right now that are watching this video. I will, in fact, though, be putting Bitcoin in the... I will be putting Bitcoin in the title of the video next time in order to attract, use the clickbait, but get the bigger audience. But I will be talking about this every day. This will be part of the show. Vonjara says, do the AI setups come with stop levels too? Absolutely not. Well, I mean, in fact, they kind of do. First of all, we have the target. We have a 4-day stop. But there's no way for us to give stop levels. What I do talk about in the training class is a portfolio stop level. And that's something that you have to figure out for yourself. Because these trades, you have to give them a very, like any trade, you should give it a wide stop. We have no stops on any of these. And that's just the fact. And that's how they work out. Every once in a while, one might go awry, no big deal. But because they're uncorrelated, we're relatively protected from that. Because one might go awry, another one might be going the other way. So, no, we don't put any stops. However, we encourage people to use stops. They find that it's best to use very, very wide stops that are coincident with their level of or tolerance and capacity for risk across their portfolio, not for a specific trade. So that's generally how we say to set the stops, that it's much more effective that way. All right. So there's the introduction. I'm not talking about Bitcoin anymore, Chris. Right. Yeah. I'll put it in the title, though. And I will still put clickbait titles in there. And I'll mention a little bit about Bitcoin. But we will be talking about this stuff every day. We'll be talking about this right here. What risk ratio do you recommend? I can't tell you that. That is completely up to each individual. Some people have, and it depends on the size of your account, your tolerance for risk. It could range anywhere from 1% to 30%. So, no, there's no such thing as 1-to-1. 1-to-1 would be ridiculous. Our trades, none of them have a 1-to-1 risk to reward ratio. They're mostly anywhere from 1-to-5 to 1-to-10, easily. But that's why I don't even bother with stops, and it doesn't make any sense to do that. You're thinking the old way of thinking, Vanjara. You're thinking that each trade has some sort of significance. Here, it's the accumulation of trades. And you'll see. You'll see. It's far more effective this way. You can make far more money, far more comfortable way of trading. All right. That's it. I'm done for today. We'll be back tomorrow with more of the same. Gotta find the exit out of here. Yep, tomorrow there'll be more of the same. We'll be doing this every day. I want to thank everybody for showing up. We'll see you next time. Have a good one. Take care. Adios, amigos and amigas. Bye.